Are you looking to incorporate your property portfolio into a limited company? If so, you had better watch this video. Hi everyone, my name is Simon Misiewicz and I'm going to be talking about incorporating your property portfolio into a limited company. And I, Simon Misiewicz from Optimise Accountants, will help you guide you through this process. But why should you think about incorporating your property portfolio? Well, the first thing is Section 24, mortgage interest relief. As you know, you cannot get the full tax relief as you could do years gone by in your personal name. So people are now using a limited company because they do get the full tax relief on their mortgage interest. The lower amount of tax is the second reason. So obviously right now we have a corporation tax rate of 19%. That could be a lot different when you're watching this video because of all the tax changes that are imminent. But so far so good. The corporation tax rates are lower than income tax rates, especially if you are a high rate taxpayer paying 40% or 45% as an additional rate taxpayer. Clearly, because of Section 24, you may not just be paying 40% tax as a high rate taxpayer. A lot of our clients are now paying 65 to even 170% tax on their profits, which, as you can guess, a lot of people are paying more tax than the profit they're making. The other side to it is legacy planning. So you can have a situation whereby you can pass assets from your company through the gift of shares more effectively than you can property. So gifting of shares is a great way of reducing your inheritance tax. And finally, you can create a family investment company. Family investment companies, FICs, as they might have known, is something that's widely used in the very wealthy clients. So it is worth having a look at that, of creating a genuine family orientated business. You all work together and make profits. Now, when we're looking at this, there is a link below this video talking about Section 24 and the disaster that's being created because of this tax change that was implemented some time ago, from 2016 now we're talking about, so some time ago. But you may not be aware of all the looming dangers that are ahead of you. So do check out that video. The link again should be appearing above my head right now, but also below this video. So let's talk about why people may not be able to move properties to a limited company. And typically there are two elements of tax that we need to be aware of. I'm going to use my guide, so I will be looking down, so apologies for this, but I'll use my laser printer. So what we're going to be talking about is CGT, which is the first tax, so capital gains tax. When you're selling a property, you pay capital gains tax. You will incur this CGT liability when you're moving properties from your personal name into a limited company. And there's stamp duty land tax, or SDLT. So if you're transferring property from one person or one entity to another, again, that is a land transaction and HMRC want their fair share. And if we look at the structure here, we've got a market value of 1.25 million. Now, they purchased this bunch of properties for £800,000. Obviously, properties, I should have said, do go up in value. And as you can see here, the increase in value is £450,000. We don't need to worry about timeframes. It's more to do with the increase in value. And relevant tax. So we're going to have stamp duty land tax, which will be based on the market value when it's transferred to the limited company. And we've just done some measurements and calculations to work out that stamp duty land tax could be £106,250 based on that £1.25 million worth of properties moved to a company. Now, capital gains tax will be based on the profit made. So you got that 1.25 million less the £800,000 worth of purchase, gives you an increased value of £450,000, which would be used for the capital gains tax liability. And in this regard, we've ignored CGT annual allowances. I appreciate there's a plethora of ways to minimize CGT, but I just want to give you a baseline of which to work from, and that is £126,000. So to move your properties to a limited company, in this regard, you're looking already at an excess of £200,000. Never mind the mortgage interest cost of giving up your mortgages and then getting arrangement fees to have new mortgages inside that limited company. So I'm sure you'll quite agree with me that there's a heavy tax burden when you're trying to move properties into a limited company. It may not always work. Now, I want to introduce to you the online community, which you can pay £9.95. The link is below this video. I'm live every Wednesday on that platform to answer your tax questions. And incorporation of properties is always something that comes up. People generally ask questions about that. How does that relate to me? This video is only a 5-10 minute video, so it won't be as good through all that detail. So why not join me today? There is a free trial, 7-day free trial. So why not jump on board and get online with me this Wednesday to ask your questions. Now, I've given you another link, which is for the Partnership Act 1890. This is a relevant piece of legislation because it can be used for your incorporation process. And as long as you meet the conditions of the Partnership Act 1890, then you would be allowed to incorporate your properties and minimize your tax liabilities. Now, the Partnership Act 1890, it looks at a few key factors. Are you a genuine business? And partnership, now, it's not a sole ship, is it? It's a partnership. So therefore, it does express that there's two or more people that is getting into business together. And the key thing is, it's a genuine business. So one of the key factors on the Ramsey case of the 2013, it talked about, is this a genuine business whereby they are managing the tenants? Are they doing some of the refurb work? Are they collecting some of the debts from the tenants? The answer was yes in the Ramsey case, and that is what I think really lends itself to the Partnership Act 1890, where it's got to be a genuine business. You can't be passive in this business. You've got to be active. You've got to be the one that speaks to tenants, sorts out their issues, as opposed to using a letting agent that does all that for you. Profit and risks. It's got to be designed, this partnership that you're setting up, in a way to make a profit. And you've also got to have some elements of commercial risk. Commercial risk in this regard would be the fact that you don't have any tenants in your properties, but you have all the associated costs, and therefore you have a loss-making business. That for me is commercial risk. So again, you've got to be in this to make a profit. For most people, that would be quite an obvious statement to make anyway. And it's not a sham. Not a sham is, the words are actually used in HMRC's legislation to say that the partnership can't be there just as a vehicle to minimize tax. It's got to be designed to set up a partnership. And that's where I would say it's a good idea to look at your family, to look at your husband and wife relationship and say, should we be using our property investments more as a business and getting involved in our business and maybe giving up our job to manage those properties? It's such a key issue, and it's something that you probably need to talk with your tax advisor and accountants. Now, I want to talk about the Partnership Act 1890, going through this partnership and then looking to go into a incorporation process to a limited company. And this is the kind of the first things, but I want to talk about the downsides. The first one is you are creating a partnership, which is actually just a lot of paperwork. If you think about it, you might have to have a partnership agreement set up by your solicitor. You have an agreement of who does what happens if you should pass away, what happens if you become incapacitated. Actually, these are very good questions and challenges that you should be asking yourself as a property investor anyway. So maybe it's not such a downside after all. You would have to eventually create a limited company, and you would have a personal self-assessment tax return to do as well. So there is a lot more paperwork if you're looking to eventually incorporate your property portfolio. So there are a few downsides. To incorporate your properties from your personal name to a limited company using the Partnership Act 1890, there are some initial costs. If you are looking to incorporate, you have got a lot of legal paperwork to say, I'm transferring conveyance from your personal name into a limited company. You've got lots of forms for SDLT, CGT reliefs to make sure that you manage properly. Well, that's going to cost you between £5,000 and £25,000. Wow, that's a lot of money when you think about it. And then you've got the finance fees from your mortgage lenders. You'll have exit fees because you're giving up your mortgages earlier than your end dates, and you will have arrangement fees in regards to your mortgages, moving them to a limited company. So there are downsides there. Tax and ongoing issues. You've got greater mortgage interest costs. That's an ongoing cost to you. Now, if you're getting a mortgage in your personal name, you may be paying something like 3.5%. If you get the same mortgage for the same property, but in a limited company, you could be paying 4%, if not 4.5%. So it could be 1% more in a limited company structure than in your personal name. And that really is quite a big cost when you think about it. So from that perspective, saving tax may not be the deciding point. It may be just the fact that you are losing money by having this extra finance cost. Because you have a limited company, you're incorporating from your personal name into a partnership, then to a limited company, you will have a lot more bookkeeping and accountancy work to do. And for some, that's just too much to bear, and they would rather pay the tax. And then finally, if you do move into a limited company structure, you will have double taxation to think about. You'll have money that's in your own name. Now it's in a limited company. At some point, you will have to extract that money out of that company. There is a lot to decide and discuss here. And what we've got here is that you could talk about our services. And there's links below this video all about our services, the pricing structure, etc. And indeed, you can book tax consultations with us. It's either 30 minutes with our lead accountants or tax advisors, or you could speak to me for an hour and a half, which is more of a strategic conversation to help you look at your structure overall. Whatever you want, make sure that you use the code YouTube25 to get your 25% discount. Okay, so let's talk about the process now of moving your properties from your name into a limited company. Is it easy? By Joe, no, it's not. So the first thing is you need to create a partnership. You need to understand, well, is this viable for us? And a partnership could be husband and wife. It could be adult children. Now, you'll notice I say adult children, and that's because if you have a child involved in the partnership, then any money that's paid to them will always be taxed in the hands of the parent. So really a partnership structure with a child doesn't really work, especially for property investments. You will need to create a partnership. Now, ideally, you would use a solicitor to do that. There are many benefits of doing that, to be honest, so it is worth going through that. And you would then have a partnership agreement. So you'd create a partnership through HMRC. By the way, when you're doing a set of accounts tax returns for a partnership, that is different to your own self-assessment tax return. So there's almost like a doubling up of the amount of work you've got to do. And I would always say that you should set up a partnership bank account as well for the money and the cost to be transacted through that purpose-built, if you like, bank account. So there's quite a bit of administration that you need to go through to set up your partnership correctly. And then you'll have tax returns. So at this point, you'll have to do your tax returns for 2 to 3 years whilst you're looking to incorporate. We always say there's a minimum of 2 years to do your tax return to show HMRC that it's a legitimate business. Some people do wait for 3 years. Now, the thing you need to be thinking about during this process is to refinance your properties. So it's good time to work with your banks to identify alternative lenders and say, look, I'm thinking about moving my properties to a limited company. What are your best rates, please? And that process itself could take between 6 and 9 months. So it's not going to be quick. So why not utilize that time of doing your tax returns to speak with these lenders? And then finally, you will incorporate. Now, the incorporation process, there's things that you do need to do. You will need to set up a limited company, which is purposely built for this incorporation. You will move the properties through conveyancing to a limited company. Now, it's not just a standard conveyance. Don't forget, we need to talk about no SDLT using the Schedule 15 of the Finance Act 2013. No CGT because you're using the TCGA Section 162. Those things need to be written up properly through the incorporation process documents, which is the bit that costs you the £5,000 to £25,000. And all the way through this process, you'll go through the refinancing as well, where the banks will value up your properties and then agree a price to give you. Now, you will use this money to pay off your existing mortgages. Now, if you go through a limited company, they may not give you as much money as you're getting in your personal name. For example, if you have a £100,000 property, you may get a 75% mortgage in your personal name, £75,000. But in a limited company, they may only give you 65%. So you may have a shortfall in which you've got to pay those mortgages off. Don't forget, if you enjoyed this, to make sure you subscribe to this channel, give me a thumbs up. But if you have any questions regards to this, quick questions that is, then do type those questions into the chat box and I'll make sure I will respond to you as soon as I can possible. My name is Simon Misiewicz from Optimise Accountants. I'll see you again soon.